I shall begin today's video with a very joyous and jubilant 1st of May trading session stock market mutterings, where I will take a grope in the murkiness and try to make sense out of this situation, because I know one half of you out there are like, yes, I'm going to make bank tomorrow. And the other half are like, oh shit, I'm losing too much money. So we're going to address both of you guys here. We're going to talk about it. But before I get started, there's a couple of things I want to talk about. Number one is, if you guys are out there and you're loving the micro caps, the cheap stocks, you want those 1,000% runners, you like the crypto stuff, Sylvia Bellrock and I created this amazing room, and you know what? It's free. It's called the Penny Pound. The link is down in the description box. Just click on it and join it. You know what? We don't ask anything from you. I mean, nothing at all. Everybody says, give me some free shit. Give me some free shit. I'm giving you some free shit. Now take the free shit before I stop giving it out. I don't want anything from you, just your participation. And if you can't give that, I don't know what to say. Now, if there's some of you out there that are looking for something different, a little more education, you want to become pros with this, you want to see real live trading in action across the board, I want you to visit Trade with Doug. Click on the private community, and the part-time traders there as well. Feel free to join us. So what we're going to talk about in today's video, is it going to be a Black Monday? Are we going to wake up to serious disaster? Because we're on the verge of it, and there's a possibility this happens. The stars, let's say, they have aligned, and you should be prepared for this. So we're going to talk about that. We'll talk about a few stocks. Then we're going to switch and finish this thing up with a couple of pennies, microcaps that I want to play. So let's get started. As I always say in these videos, the most important thing you have to understand as a market technician is levels. Things happen at certain levels. And if you go back a couple of months ago to these stock market mutterings, we were talking about how important 41.36 was to the S&P. We had trades below that, but we never were closing below that. And the first time that we got into that area, or the first time we sold down into the low 42s, this was a 6% bounce. It holds this, bounces. Retests this level, bounces another 6%. This third time, this is an 11% bounce. And here we are, back again in this extended double bottom. Are we finally going to lose this? Or maybe you don't want it to be lost. Are we going to lose this or not? I think we do. And here's why. What the markets are trying to do right now, and let me kind of like reverse, and then I'll talk a little bit about it, because I see this theme on social media. There's all these traders saying, I'll tell you what, I like this, let's say Netflix, because it's a good company. Good company. It's cheap. The price is down so much it has to rally. I don't think that's the case here. Before, yes. Now, no. Because what's happening is, since the COVID crash, if we go back to that, the market, the whole entire rally was fueled by Fed's intervention of the market with the $180 billion QE support of it. You had corporate buybacks on most of these stocks at record numbers, which was allowing the stocks to even go higher. And you were just in this maybe once in a generation euphoric pattern where all these retail traders, after being locked down, came into the business and all this money flowing into the market. And here we are. Now that the Fed is raising rates, making money harder to buy, taking liquidity out of the market, and then you're seeing these buybacks not happen anymore, earnings are starting to disappoint. Here's where I'm going with it. With all of that money being fueled into this market, nobody knows just how frothy it really was. So this market's still in price discovery mode, where it's trying to figure out, what should it actually be? If the Fed is going to raise rates to 0.75, 0.1, or 1.0, whatever, in the next coming months. If the real estate market finally gets a reality check and that comes down and there's less gains to be had for people there, what should this be? What is this without the $180 billion inflow from the Fed? I don't think the market's figured that out. And I don't think it's 41.36. I think it's more like 3,500. I think before everything settles, we're going to be full 20% correction. Hell, the NASDAQ's already done that. Growth stocks have been cooked. Some of these stocks we're talking about, Netflix, I mean, Jesus. You think it's a good company, but I guess zero is a good target for this. I mean, look at this. It was already down 50% before earnings, right? And look, that didn't do it any favors. You have Facebook. I mean, there's no rest. There's no place to hide. If you go back to some of these videos we were talking about, guys, and again, the market's always leaving you crumbs, and I can't sit here. I don't want to point fingers, but you got all these rookies doing these bullshit YouTube videos, and all they're doing is costing you money because they don't know shit about market cycles and how to trade. Excuse me for getting all riled up. But look, we were talking last summer. Risk is off out of this market. It's out of the market. You started seeing growth stocks. Shopify. Geez, I don't even want to pull up the chart. There's no more room left for it to go any lower. You had Squarespace. Let's say basically anything the exalted Cathie Wood had owned and bought, the Rokus, the Squares, whatever. All of it's gotten its ass kicked. Teladoc getting its ass kicked. All of the growth names came off. What does that mean? Risk is not a premium anymore. People don't want to take risk on. It's not risk on. Then it was just FANGs. FANGs were holding up the market. You start looking at November. Look, this is when it was happening. August, November, 384 on Facebook. Now you're down here into the ones. So FANGs started to get hit around September, October, November with Netflix. And then here you are turning a calendar year. You've got two left. Tesla and Apple that are gluing this market together, and they're probably one string away from absolutely being obliterated. Now, does that mean that they're not good companies? They're great companies, but how overbought were they, right? Just like people talk about real estate now. They say, oh, real estate always goes up. Sure, yes it does. If you buy a home today, 20 years from now, it will be a lot more money. But next year, it might be worth $200,000 less than what you chased it, and price always matters. So the long story short, the market's in price discovery mode. It doesn't know what it should be. And it hasn't figured that out in 4 months, and it won't figure that out tomorrow. And you got a Fed meeting coming up, and that's going to be something important to watch on how they react. Here, let me get the chart back up. How they react on Wednesday. Now, don't rule out, though, sucker moves. This market has continued to create the greatest bull traps in the history of bull traps. This one here, most specifically, if you remember, this big candle right here off the bottom, this was Tuesday, before the Fed, and it sunk in an 11% rally. And I'm not going to sit here and tell you I saw this coming, because I did not. What a nutty rally this was, 11% here. Now we've given this all back. So who knows? Maybe we squeeze to 43.50. I wouldn't be surprised if we even go up to 4,500. You never know. But really pay attention to the activity around this 41.36. Any additional closes under there, activity underneath of there. It's just bearish. It's bearish, and it's hard to get long and strong, because if you like Netflix and you think it's a good company, next month it'll be cheaper than what it is right now. There'll be a time and a place for that, and it's not even the time or the place. So that's my 2 cents. My 2 cents are free. Now let's move on to something else. All right, penny stocks. Yes, penny stocks. Veru. Now when I'm talking pennies, I'm normally just shorting them. But maybe some of these will be a buy. I'll give you a couple of different directions. This thing has been a bitch. Let me tell you, I remember it because I lost money on the first short on day one, which is always you always have to deal with that every so often. It wasn't bad, but anyway, I lost money, a full disclosure. We hadn't seen a micro cap in a while that did this, where it went all day with no pullback. Like you could keep adding, and it's like, okay, it's not pulling back. And it eventually didn't stop until 1750. Now, there was a little bit of backside here. But this last rally this week of pushing up into the 1550s and then selling off is probably the final backside. So there's a lot of different ways that people do it. You've got your gurus out there talking about, front sides, back sides, little sides, mini sides, whatever. Let me just give you an easy pattern to follow. It normally works like this with all stocks, not just pennies. They just exacerbate the move. You know, to get like this really impulsive move, and then it will give you just this first initial pullback, this instant rug pull, but then that normally gets bought up on a really strong one, and it tries to reattack high. Sometimes it pushes through it, but then after that, you start to see these impulsive moves slow down until it eventually just kind of works its way into nothingness. That's normally how these will work. Not all of them even make it to a secondary impulse. Most of them just give up after the first and just kind of A-frame, but the ones that are stubborn do. Now, when you go back and you think of the once in a generation, kind of like the GameStop and the AMC, they just kept going. They just didn't even offer an opportunity for backsiding until just recently. But anyway, I think you see 10 on this, 8 and possibly 6 even before earnings. I like this one here as a short. But saying that, don't be like, don't fall asleep on these squeezes. Like this squeeze right here, this one day was $4 bounce on this thing. It is ridiculous. Another one I want to look at here is the CYN. Now this one's in a different cycle, obviously, from the chart. I'm not ready to short it. I'm watching to short it, and that's what I'm watching for, is the first initial rug pull, the failed bounce, and then a secondary push lower. That's the only way I want this, because this has not showed any signs of pulling back. To me, it's too late. You could say it goes higher. It feels like it wants to go higher, but it's too high for me to put a buy. This is just not good risk reward here. Maybe if you were down in the twos, that's a different story, but this is starting to romp here a little bit. Looking for a spot. Don't have one. Maybe 6. It starts to slow down. I don't know. And Redbox. Isn't that the people that have the things outside? I don't know. Another one here. Look. This one, look, it gave you the second. Here's that secondary impulse I talked about. Your first impulse, second impulse. This one's shorter, and then it eventually kind of fades off. Maybe that does that again here. Just watch this one. I'm not ready for this one either, but I am looking. But because of its past history of being once 27, I don't want to underestimate. But there'll be shots here and there. When I say that, sometimes we're just looking for, most of the time we're looking for day trades. So what do I have here in store? The market, I think we go lower, but I wouldn't rule out short-term bounces. In fact, if you look at almost every sector in the month of April was negative, except for like consumer staples. It's not the time to get long on stuff. In fact, if anything was parabolic and long, I would short the Rokus, Palantir, anything Kathy Wood owned, I would short, except for Tesla. That's it. NEO, I'm looking at all this stuff on here. RADA, Peloton's a piece of shit. I did a video once, thought that was going to be like the next big one. I was wrong on that. Crust, they're all, everything I look on here is just red. This is not the time to get swing long anything. There'll be day trades, but not time to get swing long. A couple of nice penny stocks. I like Veru the most. I like this CYN second. And then on the back of my mind, I got some RDVX, but those are just what we have now. Every day there's some garbage running there, so there's always opportunities. That's why we're doing this. So anyway, guys, keep it real. If you need help, make sure you visit it. It's either in the Penny Pound or go to Trade with Doug. Until the next time, trade well. I'll see you soon.